What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 9th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to give a realistic answer to the question of when we're going to be revisiting $20,000 for Bitcoin, its previous all-time highs. We're going to be looking at data science models, previous price history, and so much more to get that answer. And along with this, well, we've got so much other things to talk about in this video that you won't want to miss right after our quick sponsor. And the sponsor for today's episode is Ember Fund. Ember Fund is the first non-custodial mobile app in the world that allows you to invest alongside cryptocurrency titans in just a few taps. Ember Fund not only allows you to manage portfolios that rebalance over time, but also has recently launched its programmatic yield product, which gives you a one-tap solution to Yearn vaults and the DeFi space, where you can get high yields of interest on your stablecoins such as DAI. If you want to learn a little bit more about this, we'll leave it linked down below in the description through an article that they wrote, but check out the link down below in the description to get access to Ember Fund today and start earning a higher yield. Alrighty, everyone, so let's go ahead and dive straight into it. I want to take a quick look across the board for the market here. As you can see, over the last 24 hours, the vast majority of the market is in relatively neutral territory between 1 to 2% to the upside or downside. However, we can see most plays are in the green here, and over the last 7 days, the trend has been overwhelmingly positive, scanning across the board many cryptocurrencies in double-digit territory, pressing close to that as well to the upside with very few exceptions in the red. Now, let's go ahead and just dive straight into this topic, guys, because I think it's the centerpiece of what I want to talk about today. Now, we're not only going to be taking a look here at the long-term chart, we're looking at BLX, which gives us the longest price history from the actual liquid Bitcoin markets that we know does real trading volume, my apologies. But just to let you all know, as you won't see the rate changing here, they've only used the closing daily price. So if you wanted to get the normal rate here, we're about $100 higher from where we are here on this chart. Okay, it's not really going to differ things much because we're not analyzing what's going to happen in the next hour or what's happening in the next 5 minutes. We're looking at weekly candles in this case. So we're looking at the broader movements here, and we're looking all the way back to its beginning of price history back in the fall of 2010. This is the longest price history we have for Bitcoin as an asset. Now let's go ahead and just first off talk about something that's critical to understand. The first thing that's important to understand when it comes to talking about Bitcoin getting to its previous all-time highs. There's a lot of people who talk about the idea of a 4-year cycle, usually analyzing in this case, the 4 years in this case where we have euphoria, the bear market, kind of the bottom year of consolidation, and then the exit. I like to generally focus on how long does it take us to get from bottoms and markets, right? Bottoms, like for example here in January of 2015, or here, for example, in December of 2018, to new tops. And what's interesting is that you actually find we've had multiple cycles in the past. We've had one that was, for example, 48 weeks. We have one here that was 106 weeks, 153 weeks. And in this case, we're projecting around 203 weeks. Now, the reason for this is if we take it to the monthly chart here, we can see here that we're basically adding anywhere from around 11 to 13 months per rally in this case. So we had 11 months here, 24, that's an addition of 13. Here to 35, that's an addition of 11 months. And what we do here, just to remain neutral, not be overly optimistic or too conservative, is we meet right in the middle and we add 12 months in this case. So in this case, so I apologize, it must have messed up my chart here a bit, but basically we're shooting here in this case for about 47, right smack in the middle. So 46, 47 months in this case would be the optimistic kind of historically represented length here. We have expanding cycles in this case, and I think that we need to set our estimations, if anything, on the idea that there is expanding cycles. Going from a market, and we have to talk about valuations here, going from a market size back here where we were down here, of a couple $1 billion for Bitcoin towards 200 to 300 billion as a single asset is going to be difficult. In this case alone, that already was difficult. But what's going to be even more difficult is going from a valuation range where we're in probably the 80, 90, $100 billion range, which we were back here in February of 2019, and going all the way up towards a very high valuation range of trillions of dollars. You need whole new waves of liquidity. Now, there is the institutional interest coming, and that's great, but it takes time. And it tends to be that this happens in all markets. But again, let's break down here, talk a little bit about the theory we have here. My general kind of take here is analyzing what happens in previous history on price. So if we just take our drawings off here, let's go ahead and take a look back here. at history. So this was the previous all-time highs of the last cycle, back here in November 25th of 2013. We set in a price high here. If we hover our chart here, we can see at the top, the high was at $1,177.19 on the BLX indicator. It varied across different exchanges. You'll get different valuations across different platforms, but that was the rough estimate here. And we can see as we started to come back up, we started to chart our higher lows and higher highs. We eventually got above that price point on the wicks here. We didn't actually close in this case. I guess technically you would technically get a higher close here. But all in all, basically when we got to this range, we faded out. We sold those gains. A lot of sellers started to get weary when we got to these all-time highs, even as we started to break out a little bit above there. And then eventually we started to really close up there and start to charter a new rally here where Bitcoin charged all the way up in a couple of weeks to 3,000, to 5,000, to 7,000. All the way up to 20K. The momentum kicks in here, right? This is when people get really excited. Now, if we take a look here, all right, my estimate here is that we're going to do something relatively similar here, that we're going to have some chartering in price. Now, this could happen a little bit sooner, right? I'm basically giving a quarter range here from anywhere from January to March of 2021. And basically, what we need here is for us to set in a new relative high here. We're probably going to do that this week or next week. And in this case, we'll come down, set in a higher low, and start to charter a bit sideways here as we start to test up towards this range of 18 to 20K. Right? There isn't much price history where we were up here. So it's going to take some time for us to get that confidence boost to really get above here. And I think it's going to play out very similarly to what we saw last time. I know a lot of people want to have the optimistic expectation that this is just going to blow right through. And who knows, I could be completely wrong. It could do that, guys. But history shows us that it took some time, really in this period of time here from December of 2016, going all the way here to April of 2017, and almost more than a quarter in this case of price action, where we started to charter kind of sideways. And the real question here is not when we're going to exactly tap 20K, right? Yes, technically you could say that that's the topic of when are we going to revisit the all-time highs. The question a lot of people have in their minds is when are we going to start really chartering on that next cycle? When are we going to start moving higher and starting to dominate higher price levels? And I think in that case, it's probably going to be around March 2021. And after that, we can continue our grand cycle going from 20K upward towards our high valuations of $100,000 to $200,000. That's the general range we're looking for the new all-time high. But anyways, I digress. I want to talk about a little bit of the data science models and some of the metrics we have. Bitcoin volatility may look flat here in the long term, but if you take a look at the 3-month here, we've started to spike up some volatility here, luckily for the better. In this case, this is good volatility. It means that traders and speculators are starting to trade a lot more. Price variations are starting to start to take higher leaps and slightly higher declines. In this case, we're seeing a higher volatility on the upside. This is something that a lot of people don't know you can see. You can actually get volatility when prices go higher. It doesn't always have to be downward. So another thing as well, taking a look at the stock to flow model, the historic model that a lot of people have used to predict Bitcoin cycles. We can see here we started to charter a bit upward here, but the good news is we're still relatively cheap here. And we're likely going to have what we had back here, where again, the line continues to expand for the stock to flow model, and we might have a chance at tapping up here again sometime in this range, a little bit above what we did last time. Again, bearing in mind, the important thing to keep in mind here is that as we have expanding cycles, just like how the orange line overshot the line here in April 2013, we're likely going to have it where we might not touch this line like we did last time. Again, I don't like to just look at the previous cycle. It's good to analyze all of the previous moves and also the previous halving events for Bitcoin. So I don't think we're actually probably going to be touching this line. It'll probably be that eventually here sometime going into 2021, we revisit back to this 20K level, and then we'll start to play catch up here somewhere midway through the cycle. Again, my top estimate is going to be in November of 2022. That's when we're expecting the new all-time high for Bitcoin, not in 2021. And we can see here that even if you have those optimistic levels for Bitcoin, right, this is not going to happen right here at the fair value. It's not even going to be in May of 2021. If you really wanted to be, kind of in line with history here, you would estimate for some time in late 2021 to early 2022. So I'm not even again just being bearish here in this case. I'm just being conservative and keeping in line with what history showed us, which is expanding cycles. Taking a look here as well, we're doing very well here in the 200-week moving average. We're starting to get towards that expansion phase. We're getting away. But again, taking a look at history here and factoring in the expanding cycles, we can see the price here started to shift sideways for a long period of time after we started to get up towards this range where there really isn't much room to go in regards to the logarithmic chart, which is what we're looking at here on this data science model. So all in all, again, answering this question here, this is why I believe Q1 of 2021 is the general target range. I think that we have a lot of metrics to back this up. I think above all, we're keeping our estimations conservative. It never hurts to do so as we're long the asset. It's just something to give us a bit of comfort of knowing where we can expect this stuff to move and where we can really start to expect the cycle to grow. So my key lesson or key point here is that if you're long cryptocurrencies, if you believe the cycle is going to be going to these highs and you think that no other asset class is going to do it, focus on building up your cash position and acquire as much crypto as you feel comfortable with, right? That's your decision to make. I can't tell you guys what to do, but I know that's what I'm doing right now. I'm stacking up my crypto positions. I'm building up positions in a variety of different assets across the board. So we'll be continuing to watch what happens here over the next few months. And I have no doubt that crypto is going to outpace all other markets, broadly speaking. Now, I wanted to go ahead and talk a little bit about U.S. futures here. U.S. futures spiking up here. The Dow Jones, surprisingly, outpacing all other indexes, up 5.22% at the moment. S&P 500 futures up nearly around 4%, around 3.7%, and the Nasdaq flat here. So what's going on in regards to news here? Well, there's some really positive news coming out. Pfizer has released news that their COVID-19 vaccine prevented more than 90% of infections in a study of tens of thousands of volunteers. So again, whether you guys are looking to take a vaccine yourself in regards to COVID-19, some of you might want to just weather the storm and take the risk in this case. All in all, this is really good news because this means, above all, no matter where you stand on COVID or how big of an issue it is, at the end of the day, this is going to be the excuse to say, look, we have to reopen things. Like after some time where we give people the ability to take a vaccine for it, you kind of have your two options. Either you weather the risk or you take the vaccine. There's no other waiting around. It's kind of inevitable at this point. So we either are going to have it spread in this case and have herd immunity, and you risk in this case taking on COVID yourself and the implications of it, or in this case you can take the vaccine, which is pretty cool. So again, I think above all, I like to see more kind of data and studies around the health of it and stuff in this case, and how things worked. I have to look into it more. But above all, this has not only shot up Pfizer stock this morning, a multi-billion-dollar pharmaceutical company, but it's really started to shape up the market towards a more positive position, as we can see in the futures markets. This is starting to give a lot of confidence towards the economy reopening. Now, again, this is very critical here too because cases have been spiking in the United States. We have across the board a lot of major states here. I've been kind of analyzing the interstate data here across the board in a lot of areas. And broadly speaking, no matter where you look, you're going to be having a spike here in general COVID cases across the board in the United States. And this isn't just in the U.S., it's across the world right now, predominantly in Europe and Russia right now. That's where a lot of the new numbers are coming from. So again, we'll have to see what happens here over the long term. But folks, this is some really positive news. We can't doubt that this is going to be probably one of the best catalyst factors here for reopening the economy here over the next few weeks and months, depending on what country you're in. It's just a matter of how fast they can scale this out. And hopefully we can return back to some semblance of normalcy soon in the future. Anyways, everyone, that's it for today's video. I'm curious to hear what you all think about this. If you like this video, please drop a like, consider subscribing, and also leave a comment down below what you think about the things we talked about today. Where do you think Bitcoin is going, or when do you think, in this case, Bitcoin is going to be reaching its all-time highs? I'm curious to hear from you all. That being said, everyone, have a wonderful day wherever you are, and I'll see you all in the next one. Take care, everyone.